You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
Welcome back to Mining Stock Education. I am your host, Bill Powers. Thank you for tuning in. I hope you and your portfolio are doing well today and that you're making wise and profitable investment decisions. I asked returning guest Will Thomson, he's a fund manager with Massif Capital, to come onto the show. He recently made public his investment and his investment thesis in Altius Minerals, and so I asked Will to come on the show, share with us why he invested in this company, and talk to us about its business model and what it means for the developments in the royalty and streaming space. As a disclosure, I'm not a shareholder of this company, nor are they a company sponsor of this show. So with that being said, Will, welcome back to Mining Stock Education, and talk us through, why did you take an investment in your fund in Altius Minerals?
Hey, Bill, great to be back on. So that I have a disclaimer out there as well. Our fund, of course, is invested in Altius Minerals. We've also published a research report that is available on our website, in which I'll share with Bill, and I'm sure he'll share with all you listeners. In regards to Altius, there's been a lot of discussion over the last few years about the streaming or royalty business model and how, sort of great a business model it is from the investor's perspective. One of the things that we've always struggled with as a firm looking at the royalty and streaming business model is the fact that it has almost been exclusively precious metals. And while the businesses are often fairly valued, they've often come at a slight premium that is in excess of perhaps what might be justified from the slightly differentiated business model in comparison to a regular gold mine. When we sort of started this year, looking for base metal opportunities, which is one of the sort of target sectors we had, we quickly found that there were very few royalty or streaming business models in the space, but there was, in fact, one company, Altius Minerals, that appeared to be not only rich in terms of its opportunity set within the portfolio that they already had, but also had a management team that was quite thoughtful, counter-cyclical in their investing style, and had really thought through the royalty and streaming business model and thought through how they could make it an organic, continuously growing business. One of the things that's interesting about royalties and streams is, of course, that when a precious metal streaming company, for example, takes possession of a stream, they aren't on the hook for any expansion, future expansion, that is. Yet, precious metals mines, although they sometimes can last for 50, 100 years, like we've seen some of the mines in sort of Arizona, Nevada, South America, some of them can last forever. A lot of them have much shorter lives. Base metal mines, on the other hand, tend not to have such short lives. They tend to have exceedingly long lives and extensive sort of brownfield expansion opportunities. And one of the things that Altius has really excelled at is growing its base metals portfolio in such a way that they have large stakes in deposits that are very likely to continue to grow for many years to come and have exceedingly long lives. The leading sort of mines in their portfolio, or the longest lived mines, are potash mines, and they often have 80 to 100-year lives. And so without any further capital investment, you have an annuity for all intents and purposes that's going to last longer than your lifetime in most cases. So at a very high level, Altius is that same great business model that we all sort of look at and appreciate in the precious metal space, except they've applied it to the base metal space. And in doing so, they've taken advantage of several sort of geological strengths, if you will, that many base metal mines have. And they've also generated a lot of the royalties and streams internally via their project generation business. And so oftentimes, not only do they have an opportunity to take advantage of growth for an extended period of time with no additional capex, but in some cases, they themselves found the deposit and sold it in exchange for a royalty and some equity stake in some junior miner who has now turned it into a mine. And so those royalties or streams, in fact, have a negative cost of creation, if you will, to the company. So that combination, along with the sort of fantastic management team led by Brian Dalton, who, if he's not the largest shareholder, he's pretty close to the largest shareholder in the company, just makes Altius a wonderful business to invest in. This past March, there was a fantastic opportunity to buy into the company. It's now rallied a little bit for sure, but it remains a fantastic business to buy into, in our opinion.
I interviewed twice Jamie Strauss regarding his Digby research platform for development projects, but Jamie is also a 10-year director, non-executive director of Altius Minerals. And I remember during that interview, I asked him why the base metal royalties trade at a discount when you compare them to the valuation that the precious metals royalty and streaming companies get. And he said, I was hoping you would answer that question. He said that jokingly, of course. But Will, I want to know, when you look at why the base metal royalties, and in this case, Altius, trades at such a low valuation using the metrics when you compare it to the precious metals companies, how do you chalk that up? Is it just that investors like the precious metals better and copper's out of favor? How do you analyze that here?
Yeah, so I mean, it's an excellent question. I think there are a couple of ways you could approach it. So let's just take, sort of the first track might be sort of sentiment. And I think the answer is a little bit of everything that I'm about to talk about, mind you. It's not one or the other. It's a little bit of everything. But so if we first just sort of take a look at sentiment, we can sort of say, okay, well, the retail investor is going to be more attracted, or likely more attracted, to the precious metal streaming companies. And the reason for that is simply that everyone seems to have an inherent, or perhaps not everyone, but many people seem to have an inherent appreciation for the fact that gold has been money, if you will, for 5,000 years, and that it is a good store of value, and sort of all the various positives one thinks about when they think of gold. That seems to be very sort of obvious to a lot of retail investors. They may not be able to put it into words, but they see a bar of gold and they sort of appreciate that it has value. The same can't be said for iron ore or potash, or maybe a little bit more for copper, but generally speaking, it doesn't evoke the same emotion that gold or silver does. And so I think that there's a very real sentiment factor at play. I would also say that although gold and silver have their own cyclicality to them, it's much easier for someone to observe the cyclicality of base metals, and much easier for someone to associate base metals with the economic cycle. And so the idea that the cash flows from this business will be more volatile because of a volatile price change in the underlying commodity, I think is pretty easy to understand. I would counter that, of course, by saying that there's plenty of volatility in precious metals as well. But I think that's sort of neither here nor there. It's a question of what people can observe and what people then build into their conception of what the company is worth. Over the life cycle of many of the streams or royalties that Altius has, that volatility is going to sort of even out, if you will. It's not going to get less volatile, but you're going to hit some sort of average price that is sufficient to incentivize, further mining. And so I don't think the volatility is as big an issue as long as you're a long-term holder. The sentiment issue is a very real issue, and sentiment issues resolve themselves sometimes, and they tend to take a very long period of time to resolve themselves, though, because that's a question of, hearts and minds, if you will, to sort of use a phrase from to use a phrase that I learned in Afghanistan when I was working for the Department of Defense, we were over there trying to win hearts and minds. You're trying to change people's minds about different concepts, and that takes a long time. And to get people accustomed to the idea of looking at industrial or base metals as equally important to the economy, and as potentially as interesting a store of value, not necessarily as good a store of value, but as interesting a store of value as gold, is a long-term process. So I think there are a couple of legitimate reasons for it, but there are issues that should resolve themselves over time, as long as you as an investor are patient enough to wait for them to resolve themselves.
In your report, you wrote that Altius, in your estimation, is highly undervalued. You put a net asset value or a worth on the stock at about Canadian $12.50 per share. As we speak, it's trading at about $10.44. What were some of the inputs that went into your calculation in terms of discount rate and the price of copper and such?
Yeah, so I'd have to go back and take a look at the model or the report, and I don't know. I'm just sort of looking through our notes right now, and the notes we have in our sort of management system suggest that we have a valuation actually of closer to 16 now. So I don't know if that's changed since we wrote the report. I'd have to go back and look at the notes. But I think that the assumptions were probably a 10% discount rate. 10 or 12% is typically what we use. I would have said that we use probably a 250 copper. We tend to, in our experience looking at copper miners, at least most tend to want to argue for a $3 copper price, which from a building a mine sort of perspective makes sense in our opinion. And over a sort of longer term life of mine, $3 makes sense. But from a valuation perspective, we'd like to be conservative. And, we sort of want to sit back and say, if things don't go right, we're still going to make money. And so we probably used a 250 copper price. I'd have to double check what our potash prices were. Can't remember off the top of my head, though.
As you write in your article here and explain your investment thesis, key to this royalty model, like EMX royalty, there's a prospect generation business that produces a lot of these royalties. Now, when you do it that way, it often takes longer. Altius has been around for decades now, but I think the upside in the continual stream of potential royalties is a lot greater. How important was it to you that they have this natural organic feeding of potential royalties? Because we see other companies. I've received emails about Nomad Royalty, which I haven't even looked at. I don't know anything about the company as I mentioned it, but I have received email inquiries about the company from subscribers. But as I look, their market cap, they just IPO'd, is $200 million above Altius's, who's been around for decades. So you can just raise money, go buy a royalty, IPO, and be worth hundreds of millions of dollars, or even double the market cap of Altius. But here Altius is with this organic producing, using their geological expertise. How important was that to you that they had this prospect generation business?
So it's by no means sort of a hard stop or anything. It's not as if we wouldn't invest in a good streamer or royalty business without it. But I think that one of the great things about royalties and streaming that we've already talked about is, or I've mentioned it, is the sort of low sustaining CapEx nature of the business. One of the other great things then, or one of the nice things to pair with that then would be a lack of need to go out and raise more capital and dilute your existing shareholder base. And so one of the things that some royalties and streaming companies have to do from time to time, and this isn't always the case, but oftentimes as they turn over their portfolio, if they haven't generated enough cash, they're going to need to raise more cash to acquire new streams and royalties. That's not necessarily a great thing for the existing investors. It's not something we as sort of long-term investors want to see either. I think that if you are looking for and I say speculation with no negative connotation, mind you, it's just sort of a different risk reward profile. If you're looking for a speculation and looking for an opportunity to deploy capital into a stream or royalty to generate a short to medium term return, the additional sort of dilution that might come with equity is theoretically or potentially okay. As a longer term shareholder with a view to investing in a company and a management team with the hopes that it becomes something that you can hold for 5, 10, 15, or 20 years, that dilution takes on a very different nature. It becomes it's much more negative to your returns than perhaps playing a company for a short-term pop might be. And so the ability for Altius and the management team to generate their own potential royalties is quite meaningful and quite significant in our mind. I'd also say that the fact that they have very thoughtfully sort of exchanged those royalties exchanged those potential discoveries quite frequently for a mix of equity and stream or royalty is quite valuable. The equity portion enables them to capture some of the additional upside associated with speculations in junior miners, while the royalty allows them to capture significant long-term value that some of those, but fewer of the deposits, if you will eventually capture. But it mixes short and long-term benefits in a way that I think pure royalty or stream without the project generation can't.
Will, in January, when I was at the VRIC conference in Vancouver, Ross Beatty said to the audience in the opening fireside chat or morning chat, he said that if the one advice that junior mining executives should take is that get big and get big as fast as possible. And that, of course, is the strategy that he's employing with Equinox Gold, with the mergers and acquisitions that they've done, because when you get big, your market cap increases, therefore your liquidity, the trading in the shares increases, and that seems to be a perpetual thing that puts in motion higher market cap, more trading of shares, then more funds will invest. And so when I compare that to Altius here at a $434 million market cap and the liquidity, which doesn't seem to be so high, 37,000 or 38,000 shares traded a day. Do you know from talking to management, is there any strategy to possibly combine with another company in order to get that dynamic that Ross Beatty is talking about? And then the second part of the question is there any company that would fit with Altius's business model to which they could combine?
Management has a very clear strategy around their royalty, minerals royalty, base metals royalty, and streams. They also have a growing business in renewable energy streams or royalties that's sort of brand new within the last 2 years. The combination has the potential to be quite a bit larger than it currently is, but their intention at the moment, at least, is to eventually spin out the royalties associated with renewable energy. In terms of growing the size of the base metals royalty, I don't think there's any intention on their part to grow in any way other than organic.
So investors need to be patient. You need to be patient if you're going to invest in the company. Would that be accurate?
Yes, I think so. And I agree with Ross Beatty, and we're investors in Equinox, and so we love the way they've built the business up. But it isn't necessarily true that is the one way to do it, if you will. I think that Ross is completely right in terms of trying to build a gold miner right now, that is absolutely the right approach to take. Just sort of given the sentiment around mining the last few years and the large CapEx cost associated with building a mine. One of the benefits that Ross Beatty talks about quite frequently is that when you get size, you also get sort of a discount on your cost of capital. And that, is very meaningful, obviously, for someone trying to build a mine. If you're Altius, it's less meaningful. They definitely need capital They definitely have opportunities maybe that they're not taking advantage of because they don't have access to cheap capital in the same way that a multi-billion-dollar gold miner might. But Brian Dalton, who's the CEO, is a patient guy. He's a thoughtful guy with sort of a long-term view to the way base metals are going to be used in the future. And because of the low CapEx needs, can afford to be patient, can afford not to dilute shareholders, and in the absence of that growth, that quick growth to size, can still expect to eventually get there. The same can't necessarily be said of a junior miner. So I think Ross Beatty's comments are spot on, but don't necessarily apply in every single situation.
Well, here in the States and in the Western culture, we see sometimes companies that don't have to take political positions on hot topic issues take them, potentially alienating half of their potential customer base. So in my opinion, that's not the wisest thing for a company to do. I bring that up to say with the spin-out company that you mentioned, Altius is doing this first-of-a-kind spin-out renewable energy royalty business where they're going to recycle its current coal royalties into a newly created renewable subsidiary that you hope to experience a rapid growth with. So this may be a politically correct idea, but my question to you as a finance guy that looks at things objectively, do you really think that on the financial and profitability level that this has the potential to succeed?
So I think that it's an interesting question. We've talked with management quite a bit about the spin. I guess there are two things. There's one, the question of the spin out, and the other is the question of sort of establishing this renewables royalties. Now, as a business, renewable royalties are going to be quite young, and they haven't experienced, say, a full cycle of a full market cycle or a full economic cycle or frankly anything. It's, Altius has in some regards come up with the idea. I don't know if they're quite literally the first person to do it, but they are one of the first businesses to undertake it as, sort of a core operation. They appear to be profitable at this point. Or heading towards profitability. There appears to be plenty of demand. Altius has tied itself up with two very experienced renewable energy developers in the United States. And the fact of the matter is that as a source of energy on a levelized cost basis, especially in the US, absent even government subsidies, solar and renewable are in most places, one or the other, the cheapest source of electricity. So to the degree that there is going to be growth in electrical demand and or a shift by utilities towards renewables, it seems like a good place to deploy capital, in our opinion. In terms of the spin out, there is a very sort of financial reason to push for the spin out. And the reason is quite simple. When Altius goes to raise capital in debt markets or goes to a bank for project financing or funding that will help support the sort of project financing that they provide in the form of prepayments for royalties or streams, their cost of capital on the mineral side of things is quite a bit higher than the renewable side. That is, I think that's a function of the capital provider's perspective on the risks. To say that the risks in mining are higher than in renewables seems like a fair statement. The clarity on the payment stream and the cash flows from the renewables is quite a bit steadier and quite a bit more sort of transparent, if you will, than the mining. And so they can afford cheaper capital. With the spin out, the Altius renewables segment will be able to tap cheaper capital markets, take advantage of things like green bonds and a very clear and easy case for being an ESG fund, or not fund, but ESG sort of business. All of those things will be benefits to that business over the short, medium, and long term. And in the absence of the minerals or royalty streams for the mining, the potential to grow that business quicker and gain some of that size in a different industry that Ross Beatty was talking about is very real. And so from our perspective, although we have no problem with keeping the royalties internal and growing that business slowly. The opportunity to grow it to a larger size a little bit more quickly by standing it on its own, it makes financial sense. So
as we bring this conversation to a close, whenever you invest, I know that you do your risk reward assessment, and if the reward outweighs the risk and everything looks good, you're going to go for it, which you did in this case. But I'm interested to get your take on what are some of the key risks or some of the key things that could go wrong that could potentially derail this investment.
Look, we are quite positive on the significance and importance of base metals to the economy going forward, and especially in the presence of growing electrification. We think that growing electrification is a very real trend that is going to continue. But that's a bit of a macro thesis that involves a lot of moving parts that could very easily be wrong. I know that at this point, a lot of people sort of bake into their analyses things like electric vehicles just sort of ramping up and taking over, increased use of electricity in industry where, natural gas is currently used, or sort of coking coal and things of that nature for heat. But the fact of the matter remains that if, for example, we are heading in towards a prolonged recession, there won't necessarily be the money to facilitate those transitions. And if that is the case, then base metals may not be the place to be. And while Altius is in, sort of from a balance sheet perspective, a perfectly safe position and, won't likely suffer significant, say, bankruptcy risk or anything like that from base metals sort of not having their day in the sun because electrification doesn't pick up and the economy overall suffers, they may not do very well in that environment either. So electrification continues to be one of those sort of macro theses for mining companies that is both exceedingly real, exceedingly easy to defend from a sort of factual perspective, but also an uncertainty. And an uncertainty that you probably can't put a probability on. So it's potentially dangerous to obviously build one's entire thesis around just that. We have not built our entire thesis around just that. But in terms of that sentiment change that we were talking about earlier, it's probably the most important factor in sort of changing the sentiment around base metals is a recognition of their importance for this transition to a low carbon economy. It's also important to recognize that mining will almost assuredly always be a carbon intensive business. And as such, many people are going to need to sort of come to grips with the fact that if they would like to invest in companies that are facilitating a transition to a low carbon economy, they're going to have to invest in some businesses that are themselves high carbon businesses. One can't, we can't get to a low carbon future by investing in nothing but Apple, Facebook, sort of these businesses that are without question important to the economy, but aren't necessarily actually the ones that create the change in the physical economy. So that sentiment change, the lack of a transition to a low carbon economy, these are very real sort of macro issues that may result in, no sentiment change whatsoever, no uptake in base metals, and thus just sort of a stagnation in the business. And in that regards, I wouldn't say it's not likely to become a value trap in that we don't see it likely to trade down particularly, but it might become, just sort of an unproductive investment, if you will, and that's a very real potential when one is investing in value.
If you'd like to learn more about Will's fund, go to MassifCap.com, and that's Massif spelled MASSIF as in Frank, MassifCap.com. if you're an accredited investor and want to inquire about the fund. And Will also post his write-ups, such as the one about Altius Mineral, and you can get on his email list or find some of his analyses and write-ups at his website. Well, I really appreciate you sharing with my audience why you invested in Altius Minerals and your decision-making process. I know that would be helpful to a lot of the investors that are at various stages of their investment journey and development, and just hearing you talk through your investment thesis, I think is very helpful to my listeners. So thank you for joining me today.
Yeah, happy to do so, Bill. Thanks for having me.